In life, everyone likes to have choices. This is especially true when it comes to healthcare decisions. Choice is important because each individual has different needs, values, and goals. Having choice in how we spend our healthcare dollars is a valuable opportunity. An important part of this opportunity is to understand how a qualified high-deductible health plan and an associated health savings account, commonly referred to as an HSA, work together for your benefit. Understanding how a qualified high-deductible health plan works with an associated HSA can be an extremely valuable way to plan for your healthcare needs and save for the future. In this presentation, you will learn the following. 1. Why qualified high-deductible health plans are important and how they work. 2. How an HSA works. 3. How both can benefit you today and in the future.
Qualified high-deductible health plans with an associated health savings account have become increasingly popular as health insurance costs continue to rise. Nationally, premiums have increased by an average of 80% in the past 10 years.
Increasing healthcare costs continue to significantly outpace inflation and salary increases by several times. If medical inflation continues on this trajectory, your medical costs could double again in the next 10 years.
This trend is expected to continue through 2015 and beyond, but you, the consumer, can have the greatest impact on your healthcare costs.
Choice and personal accountability. Take Justin for example. He's young, healthy, and lives an active lifestyle. Purchasing a high-deductible health plan and saving a little bit of money each month into a health savings account allows Justin to be worry-free when the time comes that he does need medical care.
It works like this. Justin pays for his own medical expenses, either from his HSA or out of his own pocket, until he satisfies the deductible limit of his qualified health plan. Once Justin's deductible is satisfied, his health plan begins to pay his providers according to the specific plan design in which he is enrolled. Choice equals control.
Health savings accounts were created as part of the Medicare Modernization Act, which was signed into law on December 8, 2003, and have steadily grown in popularity. Currently, 20% of people that have health insurance in the U.S. are covered by a qualified high-deductible health plan, and most have an active HSA.
There are some important differences between a traditional PPO, HMO, and a qualified high-deductible health plan. First, there is cost. On average, qualified high-deductible plans will be 15 to 20% lower in cost than a traditional PPO. Second, your deductible with a qualified high-deductible plan will be at a minimum of $1,300 for individual coverage and $2,600 for family coverage. This deductible must be met before co-payments or co-insurance kick in. Finally, you must be enrolled under a qualified high-deductible plan to save money tax-free to a health savings account.
HSAs are different from other medical savings accounts you may be familiar with, such as a flexible spending account. With an HSA, you don't have to worry about use it or lose it. An HSA, like a 401k plan, provides you with a tax-advantaged way to save money for the future. Medical expenses funded through your HSA will always be tax-free. After age 65, non-medical expenditures from your HSA will be taxed as ordinary income.
With a little effort, you can become an expert on how a qualified high-deductible plan and an HSA work together for your benefit. You are in control of your account. Let us review how it works. First, you enroll in a qualified high-deductible health plan. Second, you open up a health savings account with either your bank or an HSA administrator. Either way, it's your account. A qualified high-deductible health plan is an insurance plan offered by your selected health insurance carrier. Qualified high-deductible plans generally have higher deductibles than traditional healthcare plans in exchange for lower monthly premium costs. With a qualified high-deductible plan, you can choose your doctors, your healthcare treatments, and even some alternative healthcare. As this chart illustrates, you will need to satisfy a higher deductible amount before your health insurance benefits kick in. However, the premium cost of a qualified high-deductible plan will be less than premiums for a traditional health insurance plan. The second step is to open a health savings account. Often, your employer will sponsor an HSA administrator where you can open an account. This account is where you, as a healthcare consumer, fund your qualified medical care expenses, including co-pays, co-insurance, prescriptions. And remember, it's tax-free. An HSA is a personal account and completely portable. You take it with you if you change jobs. And there is no use it or lose it restriction commonly associated with other types of funding arrangements. With an HSA, the money rolls over in your own account from year to year. In addition, with some limitations, you can invest the money in your HSA just like you invest the money in your 401k account. But unlike a 401k plan, if you use your HSA funds to pay for medical or wellness expenses, you will not have to pay any tax money when you withdraw it, now or in the future. Let's hear what others have said about their HSAs.
What I like most about controlling the money in my HSA is that it works like my 401k. My personal deposits and my employer's contributions go into my account without being taxed. I get a deduction even though I don't itemize my deductions, and my account grows tax-free. When I use my HSA funds for qualified medical expenses, it is tax-free. As far as I'm concerned, it's the best tax break available today. By shopping around, comparing costs, and becoming a conscientious healthcare consumer, I not only save money, but I send an important message to my healthcare and wellness providers. Price does matter.
Being enrolled in a qualified high-deductible health plan and saving money in their HSA, Justin and Kim now think differently about how they approach healthcare. They compare prices when selecting doctors and pharmacies. They ask for generic drugs and look up medical information on the internet. They have even joined a gym and are eating healthy, knowing that a healthy lifestyle is the best investment they can make. Now when they get their HSA statements, they see how their active participation is keeping their healthcare costs down and that their healthy choices have many rewards, including a growing HSA balance. They also have peace of mind that in case of a catastrophic event, they are covered by their qualified high-deductible health plan.
You can make annual contributions to your HSA up to an allowable limit set by the IRS. For 2015, the allowable limits are $3,350 for individual coverage or $6,650 for family coverage. These limits are adjusted each year for inflation, and you can contribute the full annual amount even if you enroll in your qualified high-deductible health plan mid-year, as long as you remain in the plan for 12 months after your enrollment date.
For those over 55 years of age, there is a catch-up provision that allows an additional contribution of $1,000 per year. So even if you enroll in December, you can make a full annual contribution for that year, as well as a full contribution in the new year.
Remember, you can use the money in your health savings account to pay for a variety of medical expenses ranging from routine physicals to prescription drugs. With an HSA, you are always in control of your medical spending. The money in your HSA is the money you may use to pay for medical expenses before the plan benefits of your qualified high-deductible plan kick in. The wiser you spend, the more control you have, and the more you can save. For example, a person with single coverage contributes $279 a month pre-tax, therefore $3,350 over 12 months. During the year, they have a few prescriptions and doctor's office visits totaling $1,500. That leaves $1,850 to roll over to the next year, plus any earned interest.
Many HSA administrators allow you to invest your HSA funds after a defined minimum balance and provide investment vehicles for you to do so. This growth is also tax-free.
To be eligible for a health savings account, you must be enrolled in a qualified high-deductible health plan. You are not eligible if you are also covered by a more traditional plan through a spouse, for example. Additionally, if you are covered by Medicare or Medicaid, you are not eligible to contribute to an HSA. However, you can still use the funds previously deposited into your HSA for qualified medical expenses.
Deciding to participate in an HSA qualified plan is an important decision. It depends on many factors, like how much you spend on healthcare each year, how important long-term savings is to you, and how much you want to get involved in becoming a conscientious healthcare consumer. Your benefit decisions are very personal. Taking time to gather the information you need is very important and will help you make an informed choice. HSA qualified health and wellness plans give you power. The power of choice and savings.